The $4.5 trillion exodus. Hey, let's talk about something huge happening right now with some of the biggest banks in the world. You might not have heard of it yet, but it's a big deal. Three major players, JP Morgan, Goldman Sachs, and BlackRock, are pulling out of China. Together, they control more money than some entire countries. And guess what? They're taking with them $4.5 trillion. So what does that actually mean? Well, it's more than just a market adjustment. It's like the beginning of the end for a major era. These banks are realizing that betting on China's growth might not be the best move anymore. Let's break this down together. The reality of China's growth. For about 40 years, China has been a factory for the world. Tons of investment poured in, and banks got deeply involved. They thought China would always keep growing. But now that idea is crashing down. The property market in China is in trouble, and growth has slowed down a lot. Because of this, money is starting to leave. At first slowly, but now it's speeding up like a panic. Banks are realizing their investments in China are risky. So, it wasn't a matter of whether to leave. It was about how to do it without admitting they messed up. Instead of saying they're fleeing, they're calling it rebalancing or risk management. Sounds fancy, right? But it all means they're getting out fast. The numbers don't lie. Here's the thing. $4.5 trillion has left China in just the first 7 months of 2025. That's not just a tiny dip in the market. That's a statement. This shows that these big banks have given up on the idea that China can keep growing forever. JP Morgan once said they're committed to China. But while they said that, they were quietly moving their money out. It's like saying, "We're here for you," while packing up and leaving. And when the second in command at JP Morgan said they would have invested more if US-China relations were better, it was clear. They feel trapped. What's happening with investments? Goldman Sachs and BlackRock are also in a similar situation. They say they're actively engaged, but guess what? They're no longer making new deals. They're just managing what's left. They're quickly trying to turn their investments into cash because staying put is getting riskier. Even though BlackRock's fund looks good on paper, they're winding it down slowly. They're just shuffling things around to keep their investors calm while planning their exit. And here's something important to know. That $4.5 trillion figure covers both money coming in and going out of China. Yes, it's not just the banks leaving. Wealthy individuals and companies in China are moving their money out, too, because they're worried about what's happening there. A confidence crisis. The property crisis is creating a lack of trust in China's economy. The government is trying to hold everything together with stimulus money and other measures, but it's not working. The problem goes way deeper than just the economy. It's structural. Years of poor investment choices have hurt the overall economy, and now it needs a big reset. Meanwhile, experts in the US are keeping a close eye on all this because if China collapses, it could hurt economies worldwide. That's why banks are being careful. They know that if China falls apart, it could affect the money they still have tied up there and all the businesses linked to China. The shift in investment. So what's happening next? As money flows out of China, banks are shifting their focus to countries like India, Vietnam, and Indonesia. They're realizing that manufacturing needs to move out of China, and the supply chain is changing fast. The $4.5 trillion is just the beginning. If this pattern continues, it could create economic chaos in China and pressure the government to make difficult choices. There are people who see this coming and are adjusting their investments, while others might be caught off guard. The big banks know leaving isn't an emotional decision. It's about math. The risk-reward balance has flipped. Final thoughts. So, what does this all mean for the future? The big picture is that a huge change is happening. The China growth story is coming to an end, and the bank's quiet exits are proof of that. Those who see what's happening and adapt will likely come out okay. But those who stick to old beliefs might face tough times ahead. The exodus from China is real, and now the question is, will you keep up or will you get left behind? Let's keep an eye on how this unfolds and talk about what it means for all of us.